And we're live.
And we're
Live on
live.
the wrong
Hello.
side. Welcome to another webinar brought to you by True North Accounting.
I'm Matt, and this is Curtis. And yeah, we're just here to talk about bookkeeping today. It's a hot topic for April. And so I hope all you guys are ready to take notes and learn a little something today. It's a good topic. So I'll do a quick intro of kind of who is True North Accounting. Most of you should know who we are because you found the webinar. But yeah, we have we have two offices, one in Okotoks, one in Bridgeland in Calgary, and me and Curtis are the two partners, and we do small business. We focus on small business bookkeeping, taxes, accounting, and yeah, we've recently offered other services like CFO services, payroll, bill pay, um, yeah, anything that really has to do with the financial side of your business. This is the two of us last summer drinking a beer on our patio here.
Danny in the
And
background. We've got a growing team and a bunch of other really smart and cool individuals that work with us. So some of you might have met them in your interactions with us, and some of them are tuning in live right now, watching us. So shout out to all of them for all the hard work they've been doing during tax season so far.
yeah, it's been a grind, but April 30th, it should all wrap up. The states, their end of tax season's today, so we're always jealous about that. But I think they've got a bit of a COVID extension down there, so we might be better off this year. Um, okay, so here's our agenda today. We kind of the format of this is we're going to go through the bulk of the material and then give you lots of time at the end to ask questions. We should be done by 4:40. Yeah, if not sooner. And we'll ask some poll questions throughout. So you'll see along the bottom of your screen, there's call to action, ask a question, polls. And so the poll question, I'll tell you when to click on that to answer those. If you have any questions, like as we're going, you can just click that ask a question, type it in there, and that's how we know which questions to answer at the end. And you can vote up questions if somebody else has like entered a question that you were going to ask, vote it up. And so we'll start with the question with the most votes. So it's sort of a popularity contest for which question gets the most votes. That's what we prioritize. Okay, so we're going to go through kind of what bookkeeping is and why it matters for small businesses. And the end goal of it is really the general ledger and the trial balance. So we'll talk about those. And then really like how to make it as simple and easy as possible. It's not really all that easy, but yeah, if you do certain habits every day, you can make it as easy as it can possibly be made. There is talk about, like, I don't know if anybody saw Jeff Bezos buying into Pilot, like an accounting firm, and so there's talk about how things could be automated, and Xero, the accounting software we use, likes to talk about how they use AI and all that. But it's still, at this point, it's still a very manual process, and like as a small business owner, you still have a lot of responsibilities to, like, you have to search for documents and provide them to your accountant and then explain, and there's still a lot of back and forth. Nobody's really figured out how to really bring everything together. And like, there is certain things you can do to make it easier. I think it will get better and better as we go, but it starts with a few key fundamentals that we'll take you through. And then, yeah, we'll have lots of time
And
at the end.
whether you're doing some of this stuff, you're doing all of the bookkeeping for your small business yourself, or if you're just handing things off to us or to a bookkeeper, to an accountant, there's still some good, like a lot of info in here that's going to apply regardless of what stage you're at as far as but there's yeah, some good basics and some advanced stuff in here for those of you that are doing all the bookkeeping yourself and want to get better.
Okay, perfect. I just hear my dog scratching at the door. Need to get somebody to come letter N. Okay, so this is a quote from the founder of Visa. He says, making good judgments when one has complete data, facts, and knowledge is not leadership, it's bookkeeping. So really, like, in a perfect world, you would have your bookkeeping completely up to date. You'd have real-time data. You'd be able to make decisions about hiring, firing, investing in equipment, expanding expanding services, like profit margins on different lines of services. All that stuff is basically, it's garbage in, garbage out, and your bookkeeping is really your business's data sorted into a usable format. So that's what we'll take you through today. So bookkeeping is an important part of running your business, and it's really like categorizing your purchases, sales, receipts, all your deposits and payments that your business does in a year. It's anything to add to that?
Yeah, just there's things that are often missed, but proper bookkeeping, like done right, you're capturing every single transaction of the business or the company. So purchases, sales, receipts, that's where it all begins.
Mm-hmm. So the real end piece, that like the goal you're working towards when you're doing bookkeeping, like on a day-to-day basis, is you're building the general ledger. The general ledger is really like a list of every single transaction categorized into different categories, like different accounts on your chart of accounts. So your bank fees would go to a bank fees account, and your insurance would go to an insurance account. So this is an example. This is just like a screenshot of a part of a general ledger. And so you can see like this insurance account right here, 6520. That's like the account number. And cooperators. Every month there's a cooperator's charge, and the total sum of that is basically how much you spent on insurance during the year. Office expenses, True North accounting costs, like your consulting and accounting fees would go to that account. You have your bank fees down there, $12 a month. So if you know, yeah, you paid $265 a month for 12 months, that's how much should appear on your financial statements and your tax return when it's prepared.
When bookkeeping is done, it's complete. You're gonna end with the general ledger in some format, and here, like, it should be organized, and it should be traceable. So it should be easy to find any expense, any income, any money in, any money out, any transaction within the business. You should be able to find it here and see where it was coded to. And the end of this, what flows from the general ledger, gets us to the trial balance, which the trial balance is sort of a report that summarizes the ending numbers in all of those accounts with from the general ledger. So it's a one-page summary of the general ledger for the specific time period, usually the company's annual, the fiscal year end. Balances at the period for each of the accounts in the chart of accounts. So chart of accounts, general ledger, sort of go hand in hand, and all the transactions from within that, you're going to see the totals, the summary on your trial balance is sort of the snapshot when everything is done. And this is the ultimate end goal if you're doing bookkeeping. It's where you base things for, like, handing off a completed trial balance to an accountant. That's what they're going to use to prepare the year end, prepare the corporate tax return, make all the calculations for tax balances owing and GST owing and so on.
Yeah, so this is a great time to pause, and let's open up the polls. And if everybody could answer that first question, what is the first thing that comes to mind when you think of bookkeeping?
Nobody's clicked on doing payroll because nobody likes doing payroll.
Well, I don't think many people like doing bookkeeping either, but
No.
Some people do. Some bookkeeping hardos just love to see this trial balance just all make sense and be nicely balanced, and nothing's out of place. Like, that is when you've been working on a file for hours or days or weeks and you finally get it to that point, it is like, it's an accomplishment. It's like reaching the top of a mountain. I know.
And if you ever give your accountant a complete and perfect trial balance, you just know, even if they don't mention anything, just know that they absolutely love you for it, and you're
Yeah,
in their good books.
if you do that, ask for a big refund, and we'll consider it. It hardly ever happens. Okay, so yeah, so the chart of accounts you can see on this trial balance is the account code with the description like sales or COGS. And there's a few different types of accounts. So there's revenue or income accounts, there's expense accounts, there's assets and liabilities and equity. So there's really the 5 main pieces, and they're all kind of summarized on this one page. So this is really the basis of, this is what an accountant needs to start on their piece, and it's kind of where bookkeeping ends. Okay, why does bookkeeping matter? Bookkeeping's, just how you know what your business is doing. Like, you'd be totally lost if you didn't track anything. You wouldn't know who paid you. You wouldn't know what bills you have to pay. You wouldn't know if you're making any money or lose. Like, obviously, you check your bank statements, but yeah, it really is required for every business.
Yeah, you'd have no deeper insight into anything if you're spending too much on certain things. The fundamentals of bookkeeping just keeps you as a business owner so much more in check into, like, how did last month go? Why am I doing better? It just gives you the basis to be able to make better business decisions, whether that's to save tax, grow your business, get more money out into your pocket, whatever the goal is. The bookkeeping, that's where it all starts.
Good. And then who relies on the bookkeeping, like, externally? And it's the CRA for sure, because it's the basis of your tax return. Like, the bookkeeping is how we figure out how much you spent on purchases and supplies and all that. So that all goes into calculating how much tax you owe. So, like, you're relying on it for how much tax you have to pay. The CRA is relying on it. If you ever need a mortgage or you want to apply for a line of credit, a credit card, you want to finance or lease a vehicle, you want to get lease space for your business, you want to bring on a business partner that's going to buy in or take on investors, like, all of that stuff is just based on the data that comes out of the bookkeeping. Not even to mention like margins and cash flow and all that.
Yeah, and it's mandatory. It's pretty much mandatory. It has to be done. It's difficult, and you don't want to do it, but it's so vitally important, and it can be made a lot easier than some people struggle. A little bit of understanding of what actually needs to happen can make it so much easier, and just you're not wasting your time doing something that's not even getting you to where you need to be at the end.
Okay.
What are the fundamentals of bookkeeping? So, when is bookkeeping complete? So some of the fundamentals. The bookkeeping, it's complete when you've done the following. So these are the 5 big ones. You got opening balances, minus the first year of operation, obviously, but you're going to have opening balances. You're going to enter the journal entries from the prior year, and you're going to make sure that the opening balances are going to match the ending from the prior year, what the accountant gave you or what was on your tax return for the last year. So you need accurate opening, or you don't have a chance of getting it right by the end. Bank transactions, so every single transaction through the company has to be recorded. And so companies, bank, credit card statements, every single line item has to get coded or categorized to put to a certain account. Income, expense, or balance sheet starts to get a little more complicated. The bank account balance, the bank account in balance, it has to be balanced, and if not, it's not right, essentially. Ensuring that the period ending bank balance on your trial balance, so once you've entered everything through the general ledger, you've got your trial balance, it actually matches your bank statement or the cash that is in the company, or the credit card, or the loan, or the line of credit. So it has to balance, and doing that every month is a really good habit, instead of just hoping that it balances at the end of the year. Then we get into a few other ones. So outstanding invoices, keeping a list of the unpaid invoices to date, marking them when they're paid, so you know who actually owes me, who owes me for what I've done at the end of the year. Who do I have to get paid from? When am I? It helps with cash flow, and it's needed because the revenue is technically it should be recorded when you earn it, not necessarily when you get paid. So you need to know what you've invoiced, who owes you, and then receipt statements, invoices. So all the bank credit card statements, whether they're saved in HubDoc or which is a great tool, or um, uh, a normal regular paper filing cabinet, I guess. You need to have all your receipts, all your invoices, all your copies of all the transactions saved and stored somewhere.
Well said.
Oh, thanks.
Want to keep
What are
going?
okay, yeah, you need to know the cornerstones of easy bookkeeping. So all business transactions are all in the business bank statements. So you want everything that happens for the business to be within the business bank statements.
You're
You
gonna
don't
hear
want
us
to,
talk about that a lot today. Like just keeping business and personal separate is, if you get one thing out of this webinar, it's going to be that. It's going to make your, like that. If you don't do that, your bookkeeping is never going to be easy.
like the business has its own transactions, and you personally, you've got your own day-to-day transactions, your expenses, and you've got your own bank statements, credit cards. Your company has their own bank statements, credit cards, and keeping those together, not intermingling them at all, is really important to avoid, just to keep it simple. Because if you know everything the company is doing, is spending, is earning, is through the bank account, you can rely on one document. One bank statement is going to show you everything. So non-business expenses are absent. You don't want to mix up a bunch of your personal expenditures month to month, your daily coffee, your skip the dishes, your Netflix subscription. You want to keep those separate, so you don't have any, you keep those two worlds separate. Get your bank statements, save them in PDF and the Excel, the CSV version. Make a habit of getting them monthly, depending on the bank. Some banks you can go back farther than others. Same with credit cards. So pulling your statements, have them, save them PDF and Excel, and you've got them readily available. So you never have to worry about going and collecting them after. Sales invoices, so you're going to create an invoice, you're going to send it to someone, and then you're going to hope to get paid. And when you get paid, you want to be able to mark those, have some format where you're indicating what's been paid and what's still outstanding, so you know at an instant who you still have to pick up the phone and call, or go knocking on doors if it really comes to that. You want to know what's owing to you and when you're going to expect it, because knowing when the cash flow is coming in is key to operating, especially in the environment we're in now. So, and then number 5, another cornerstone: receipts, bills, e-transfer histories, check stubs, deposits, all the copies of documents you might need to look at, reference, look back at in the future. Have them available and organized. So there's a few tools that make that really easy, beyond just file folders and that. So single entry, double entry. We were debating taking this slide out because we didn't even want to talk about single entry. We looked, double entry accounting has been around since I think 70 AD. Matt, you looked up, and it's been around forever. It's the only thing that
I did a
truly
bookkeeping
works.
tour through Europe a couple of years ago. So if you want the history lesson, we can talk about Florence and Venice, and even the guy from Dubrovnik that started it all. But
Don't make people jealous of your time away when you travel for bookkeeping courses in Europe. Nobody needs to get jealous over that. So,
that's how you get it. That's how you make it a business expense.
right, there we go, an extra tip thrown in there. But so single entry bookkeeping, you're just recording the income and expenses. It's really only appropriate for sole proprietors, where you've got income, you've got a few expenses, and nothing else really matters. But double entry bookkeeping, the basis of that is that every single entry has two sides. So you've got something leaving your bank account and you've got the expense, or you've got something going into your bank account and you've got the revenue. So there's always a second entry, and it's the the basis for what formulates what builds a balance sheet. So when you acquire a vehicle or a piece of equipment, you've got money being spent and you've got an asset being acquired or going into debt, getting a loan. It's how the world works. It's how every single business, every single type of bookkeeping is essentially based on double entry bookkeeping, and it's required. It has to be done in order to have a proper general ledger and trial balance. So you can see here a quick little example. Just you see the credit leave on the right side, leaving the cash account, and then you see the expense being recorded in the most simple format. So most cloud-based accounting software, Xero, what we use, a lot of the good, like this is happening within, whether you know it or not. If you picture the most basic form, your paper general ledger that you can buy off the shelf at Staples, you're still doing it there because you've got a cash transaction on the left and you've got your second entry in the corresponding far right side, those big ones that fold out and take up an entire desk.
Think of like everything is like a barter system, and you're always trading something to get something. And so if you're say you're got some magic bean or a cow that you're trading for some magic beans, you're going to be giving away the cow and getting the magic beans. So credit cow, debit magic beans, credit cash.
Wonderful example, Matt. That was beautiful. So by starting the bookkeeping process with the bank transactions, one side's already done, and you've got to pick the other side. So you've got to determine what you're spending on, and it gets more complicated, obviously, when there's sales tax involved, and double-sided can turn into a few. There's a few more complications, but that can be made easy as well, especially with cloud-based accounting software. Any accounting software really can take a lot of the guessing and the actual like accounting 101 out of it and make it easy. But just knowing how it works behind the scene, having an idea of how it actually functions is it's good. It's helpful. So cash spent on the expense, you just need to tell it what the expense is for. And
good.
What?
Okay, so what needs to be done to make bookkeeping easy? This is where it gets fun. Okay, so I don't know if I mentioned this before, but number one, separate business from personal. So get a bank account, credit card for your business, and just like it comes down to like daily transactions and setting up all your recurring payments. But like you're going to Home Depot, actually I'll go to Costco, to the Costco example. Like every time I go, I'm buying something for the business and obviously something for personal. I'm not doing 2 trips. But everything will be in the same cart, and I just load up everything for the business, put that through first, and just do 2 different orders and pay with 2 different cards. I think the tellers see it all the time, but that's the most basic example of like, yeah, just you don't want to have your like breakfast smoothie supplies on the same receipt as like paper and staples and stamps and stuff like that. So yeah, keep it separate. And the goal is to really just make your bank statements this clean ledger of all your business transactions. In an ideal world, and one where cash isn't used all that much, so it's always going to be an electronic transfer of money somehow, or a check sometimes. Like your bank statements are really that like perfect ledger if everything goes through there. And perfect.
And just to step it with that Costco example, what you run if you don't create the separation with the different cards there, there's 2 risks you run there. Whether if you're looking at the bank statement, you're doing the bookkeeping, or you're giving the bank statements off for someone else to do the bookkeeping, you're a month later you're looking and you see Costco, and either you assume it was all, or 3 things I guess could happen. You'd have to go dig up that receipt, see what it was, make some weird entry to split out personal and business, waste time. You don't want to do it. And so what people usually do is they make an assumption and they say, well, maybe it was all personal. And you just didn't get, by making that assumption, you don't get credit for any of the business expenses. You don't get the write-offs, you lose tax dollars. You make the opposite assumption and you be super aggressive and you say it was all business, then you run the risk of anytime in the future, if CRA does a review of something, if they a post-assessment review and they see all these personal stuff mixed in with business, and they're like, you're claiming this as a business expense, oh, we got a problem here, we're gonna get, like, strap yourself in, we're doing a full-blown audit and we're gonna really look. And then
Yeah,
yeah,
like one signal like that can like just tip off a CRA agent that like, oh, things might not be done completely right. Let's just open it up. And yeah, you don't want to do that. The other thing is like, until computers are fully doing your bookkeeping for you, there's an actual person going through all your statements, and we don't want to see your whatever you order online or your subscriptions. Like, we don't want to know what you do in your personal life. We like
we
just
see it all and we don't need to.
yeah. So yeah, if you have a corporation and maybe you don't qualify for a credit card at the corporate level, or you really like the points that these personal cards give you, you could still like have a personal credit card, but just like designate a business. Like, just know like, okay, my Costco MasterCard or WestJet MasterCard or whatever it is, like just know that one is for business, and it's still like a clean, like keep it clean, even though it has your personal name on it. It still adds a lot of value. Number two is, like, for anybody that is a client of ours, you know that we basically the first thing and the most important thing we ask for is your bank statements, and it can be tough to get them sometimes, at least in a format. Like, we want them in Excel at the end of the day. That's how they get into the accounting software and they're usable. But yeah, so if you can download every month or every 3 months, however often you do your bookkeeping or log in, or however often you get a reminder from us, download those and save them, as well as your Interact e-transfer history, because that only goes back so far. Some banks are only 3 months, some are 6. Paper statements, if you're still getting statements mailed to you, those are fine. We can convert them to Excel. Cost money, and it can be finicky, especially if you've written on them or they're crumpled, or like pristine paper is fine. It just costs money to convert them, but ideally you would have PDF and Excel. And yeah, HubDoc can fetch those automatically. Like, this screenshot here is a bank statement that this is a screenshot of HubDoc. This is my bank account that it just pulled out automatically. Every month it just goes and saves this and the CSV file of the same in my HubDoc account, and they're just there for whenever I need them. But yeah, you look at this.
Sorry, Matt. Some of these tips, like if they're different from what you're used to, it doesn't take long to make this the new normal. And well, I just used new normal in a different circumstance than we've all heard it lately. That's anyways. It's becomes part of the routine so quickly that once you just implement one of these, a piece of software, oh, I don't even have to pay for paper statements. I don't need them in the mail because I'm just gonna log in once a month and pull them myself, or have a program do it for me. It very quickly becomes what you're used to, and it's so much easier.
Yeah, and most banks charge $2 per month for paper statements these days anyways. Okay, the next thing is, how do you invoice your clients? There's a lot of different ways. Things have changed a lot recently in the last few years, but it gets ultra convenient if you just use your accounting software to also do your sales invoices. So Xero, QuickBooks, Wave, FreshBooks, Sage, they're all like almost invoice first programs. At least Wave and FreshBooks are, and QuickBooks, a lot of people only buy QuickBooks for invoicing. There's also some more like industry specific, like a lot of freelancers or consultants use Harvest. It's time and billing. BQE Core, similar. Jobbers for a lot of like lawn maintenance, window washing companies, like landscapers, where you have like crews to schedule, and you're invoicing $150 at a time. So all of those are great. And if it's also and those time and billing softwares, they will all integrate with Xero, so it's not a problem. But having them right in your accounting software, you're able to track who's paid and who's not, and who hasn't, and it just really makes it easy to keep your accounts receivable listing up to date and accurate, so we know what. Yeah, we basically when it comes to accounting, we know which ones are unpaid at the end of the year.
And for ease of bookkeeping too, most of these programs will automatically book the entry. When you create an invoice, it will automatically put the receivable in the right spot, and it'll automatically put the sales to the right account too. So if you think back to that example picture of the general ledger, it does a few of the, just by creating an invoice, it does a few of those transactions for you. It handles that automatically.
Yeah, and every one of these allows you to also accept credit card payment, which is super convenient. That is a big step forward in the last few years as well. So you can have like Stripe or PayPal right on your invoice, and when you email it to a client, they can just pay by credit card right there. I'm sure we've all experienced that. And then there's pre-authorized debit, direct deposit, ACH, whatever you want to call it, is just a cheaper way to take money out of your client's bank account if they approve it, and it's just cheaper. E-transfers, checks, cash, they're not going away, and they are convenient and cheap, but they're just harder to track. Then you gotta get all your check stubs or like your e-transfer history sent and received, because like you don't really get too much details from the actual bank statements.
Mm-hmm.
Whereas like Stripe, PayPal, you get a little bit more information on the bank statements when people pay using one of those methods. But yeah, when you keep your bookkeeping up to date, like in real time, that's when you can like set your automatic invoice reminders in Xero or QuickBooks. So if somebody's missed their 30 days to pay, they start getting email reminders. And if any of our clients are out there, they probably get annoyed at those, but blame the software. Don't blame me. And this is like what it looks like to create an invoice in Xero. And then you can just email the invoice right from there, type in your own message, and yeah, that's just a copy of the email. So not a lot of value in that slide, but just thought I'd show an example, get some non-text slides in there. Business documents and how to like having a system and some daily habits for how to manage these is just like so important for like, I think mental health in your home office, having like paper bills stacking up, it just adds to the chaos of life already when you're just like drowning in paperwork and nothing's organized. So I would either commit to all digital or commit to all paper. So if you're doing paper and you get invoices emailed to you, then you have to print them all off and file them. But you can have a really organized filing system. You just have to take that extra step to make sure everything's in there. And then digital, same thing. Like if you just switch all your bills to be paperless, I think it's easier. And then you can set up rules in your email inbox to like auto forward all those receipts and invoices right to your HubDoc account. HubDoc is what we use. It's a hub for your documents. And yeah, it saves it. It's got OCR technology, which is like optical character recognition. So it'll actually like read what this invoice is. If it's if it's for a consulting or like a marketing freelancer that's billing you for their services, it will read who it's from, the date, the amount, when it's due, how much GST was charged, and then it saves it in a folder structure so that you can search it and retrieve it when you need it. And like if you were to take a picture, scan that paper receipt or invoice in, then you have to figure out, okay, what folder do I save this? What do I name it? Do I go by date? Like, is July a folder? Or do I go by category? Is this an office expense or is this insurance? Or do I go by supplier and you have a million different folders for every supplier? So HubDoc just does all that for you, makes it as easy as it could be. Anything to add on that?
Well, if you think about, like, a lot of people get over concerned with the organization. Like, it should be organized, but if you think about how often, like in the bookkeeping process, if you're recording all the transactions, you're double checking, your desk is covered in paper, how often do you need to go back to them after, right? Like, a lot of people are hesitant to switch to all sort of digital filing, but realistically, you have boxes in the basement that probably haven't, they're collecting dust. You don't have to go back. You have to go back in there for a couple reasons. If CRA asks you, starts auditing you or asks for something, you got to go digging around. Or if you have a question from maybe an employee, a customer, a client, or you are curious at something and you got to go look back. But it's not that often. Like, you have to, by like tax rules, say that you have to keep them or have the ability to produce them, but it's not that often that you're going back that far. So it's pretty easy to rely on a switch to full digital and instantly have the access to search these few odd things that you need to go find when you need to know something. If you want to check on a prior quote from 2 years ago or something like that, it's pretty easy to type in a keyword and you found it.
Yeah.
And even when you're looking at, like, here's an example of a receipt. This one's, whether it's 7-Eleven or a quick trip to the bottle store after work, like, you've got all these tiny little ones, fuel receipts, right? You don't want to keep all those. They turn to dust. And this one, you snap a picture, you throw it away, you properly recycle it, and then you've got it searchable anytime you want, whether it's at this one in the example, there's a 7-Eleven category that it automatically put it to just by taking the pictures. So
Yeah, these are all the vendors that have been uploaded. And then this just explains the 3 ways to get documents in there. You can open the app and take a picture of the receipt like I did on this one. You can forward an email, right, like at True North Accounting at app.hubdoc.com. That's mine. That I have a rule in my inbox that just forwards anything that has invoice in the subject. You can also just drag and drop. Those are the 3 main ways. So yeah, recommend trying HubDoc. Receipt Bank is another option. Yeah, so snap a pic, email them in, drag and drop. Auto fetch is an interesting one. So there's certain, like, your HubDoc allows you to log into your bank, and you teach it to log into your bank each month, and it will download your statements. So that is an awesome feature of HubDoc, way to automate the downloading of your statements from your bank each month. But you can also do it for other vendors like Rogers. So HubDoc auto fetches my Rogers statements every month and just saves them in there, and I don't have to get them mailed to me. I'm finally off like the Rogers mailing list because those statements just pile up. So yeah, just more HubDoc stuff. Want to be conscious of time here. So use the business, to summarize, use your business bank and credit card on a daily basis. That's just like taking somebody for a coffee, as a business, as a personal. Save your bank statements. Use HubDoc if you can to automate it. Mind your sales invoices and how you do those, ideally in Xero, and keep them up to date, match them with deposits, and then just get all those receipts and bills going to HubDoc. And if you do these 3 daily things, like, just build these in, make it second nature. Just what card do you pay for something with, downloading those statements, and then snapping pictures of receipts, and your life will be so much easier. So if you find bookkeeping extremely frustrating, you should try implementing these 3 habits and see how much your life improves.
Now, after all the rambling, all this is done now. How do you actually do the bookkeeping? So you're going to categorize the bank transactions. You've done the other things we've talked about. You got a bank statement from the company that just has the bank transactions, and you're going to, whether it's in a software or however you're doing it, you're going to have a bank transaction on the left, and you've got to categorize it to an expense on the right. So in this example, Xero's pulled in this transaction from online banking. It pulled the line items from the bank statement, and on the right we're going to just categorize them to the expense category that we know best. um, Maybe you're not, if you don't do it absolutely perfect, it's not the end of the world. You get better, and as long as you're consistent, that's really important. You can always, you learn and improve as you go, obviously, but for the most part, you remember what's happened the last few days, the last month, depending on how much is going on in your business. So when you see these line items off the left from the bank, you know what that is, and you know how to, that's employee benefits. That's what we pay group source for. So let's code it to employee benefits, and we'll move on to the next one, and you can do it really, really quickly.
And there's
No.
always like with Xero, you can always fix anything. Like say you booked all of this to insurance instead of employee benefits. There's some neat features in Xero where you can just like recategorize that everything in that one account to the proper account. And then this right here is like you can account for GST in the price, which there's no GST on insurance, so that's why it's 0. But if it was supplies or like repairs and maintenance, it would have 5% GST in there. And so it's like automatically carving out that GST piece and putting it into a nice account for when you have to calculate your GST at the end of the period.
Yeah, bank reconciliations, we'll speed this up a little bit. We don't have too many questions, but we want to leave some time at the end because there's always ones that pop up. But I do want to make it clear that sometimes what we see, where we see frustration and anger or misunderstanding or miscommunication, is when someone thinks they're doing the bookkeeping, but the problem that arises is when someone's doing 95% of the bookkeeping. If it's not done 100% in total, almost has to be redone. So if the bank doesn't balance, it means you've got the opening bank balance, every transaction gets coded, you check that the ending balance in the software matches the bank statement. You've got a bank reconciliation. Maybe there's a few outstanding items. They're not so common, but you've got a balanced bank. And knowing that, you're confident to go into the next month and do it again. If it doesn't balance, you continue along, you hand it off to the accountant. Your bank's not in balance, and they have to, part of what the accountants do, they have to go and fix it. And it can take longer to find a single missing transaction than it can do to just redo it from scratch. So it's such a core concept, the bank reconciliation, keeping the bank in balance, and it's a way to ensure if you have all the business transactions on the bank statement, if your bank's in balance, you know you haven't missed a single one. And Xero makes it so you can't. It pulls every single one in, so you just have to make sure you're done reconciling them all.
Brilliant.
Yeah, general ledger, these are the same pictures you saw earlier, so it kind of shows how it ties together, but you code everything. You've got your bank reconciled each month, and then you've got a full general ledger showing all the transactions in all accounts, and it flows right through. Software will spit this out for you once you're done all the reconciling. So a lot of this is made super easy once you're done the basics.
Okay.
Some
I'll
comment.
take this one.
Okay.
Yeah. Missing transactions will throw off your bank recs. We talked about that. Coding transactions to the wrong account. Like say you're skimming through insurance and you see employee benefits in there. Oh, that is it's wrong, but it's not a huge issue. But really when you have a balance sheet item booked to an income statement account or vice versa, that is not great. That's not great. An example of that is like you have a vehicle purchase in office expenses or something like that. That should be capitalized and put on the balance sheet. Or like your interest and principal payment on a loan is both booked to, like interest is income statement, the loan balance is balance sheet. So you have to separate those two. If you looked at one of these transactions, like where cooperator should be $153 a month, maybe it's 1,530. Oh, decimal is off, and that can throw things a lot. So that's manual keying error sometimes. Put in, if you got your December 31st, 2019 tax return filed and you book something into the 2019 year afterwards, that will really mess everything up. So you want to like lock that period off. Not keeping your receipts and business documents, not keeping your sales invoices marked as paid and up to date. And some people can do bookkeeping themselves, but often trying to do it yourself is a common bookkeeping mistake. Anything to add to that one, Curtis?
No, that's good. There's a lot of the core ones flow right from that, so that's good.
So yeah, in summary, your accountant will love you if you have your general ledger and trial balance prepared with all accounts reconciled and the supporting documents in HubDoc. That is like our dream, and we'll get there. We'll get there soon enough. And you might be asking, okay, it seems like if I do that, I'm doing all the work. Then what am I paying for at the end of it? So what do accountants do? And really, it's anything that's not going through the bank. We want to maximize your write-off. So anything you can get credit for that's not like in the like cash in, cash out method, we would accrue for. So home office, vehicle, cell phone, if you're paying for that stuff personally, we'll take care of that. There's in like all those balance sheet items, a lot of bookkeeping, well, it does include balance sheet and income statement, but a lot of the biggest mistake I think is just assuming that you're just trying to get to an income statement. And accountants really focus, like our training is really balance sheet. Like that's kind of the difference in the training. But running depreciation on equipment, like calculating dividends and making those entries, yeah, your shareholder loan, all the ins and outs of like personal expenses or cash injected, and then doing the actual corporate tax return and financial statements and
Calculating tax balances and yeah, communicating that to you. And there's other accounting principles and tax laws that need to be considered. And simply going through the transactions on the bookkeeping side, it won't necessarily capture that. So the accountant takes it to the next level. But there's other things that like other services accountants can do, and a lot of this sort of naturally arises when we're chatting, and it doesn't happen during the bookkeeping phase or necessarily the year-end phase, but that's usually what an accountant or a CPA is going to, they're your go-to person if something like this pops up along like corporate restructure. If you've got a new company, a new investment, you've got some business planning, you want to bring in a partner or a shareholder or some profit sharing, CFO services, debt packages, having someone really take a deeper dive into the numbers and give you more insight. The fourth, what running reports explaining what the numbers all mean and why. Like, sure, you've got all the numbers, you got the trial balance. What does that mean? How can you use that to make decisions?
Yeah, have you ever heard the term like accounting is the language of business? And like your financial statements can tell a story, and particularly the balance sheet, that has stuff in it right from the moment you incorporate it. And like a good accountant can like read between the lines and like have some really good insights on your business just from like, okay, like interpreting what balances carry forward and how the income statement and the balance sheet interact together. And there's a cash flow statement. That's a whole other piece. But yeah, a good accountant should be able to tell you the story of your business and explain it in a way that makes sense, like a Jack and the Beanstalk analogy.
Yeah, something as simple as, say, the final day of the year, you receive a huge $100,000 deposit on work to be done the next year, and the bookkeeping might say that's revenue, but realistically, the accountant will, there's adjustments, they'll pick that up, they'll see, hey, that's actually a deposit, that's not revenue, that's going to be revenue in the following year. So you don't owe the tax this year, you're going to owe way more tax next year. Let's plan for that. And identifying those things that don't just naturally surface out of the bookkeeping process.
Well said. Okay, that is the end of it, just to summarize, separate business and personal, import all your bank transactions into Xero or QBO, whatever you use, and then just code each transaction to an account. Do your invoicing in there and match deposits to those invoices, which should mark those as paid, so you always know which invoices are not yet paid, and you can go after your clients, nag them a little bit. Then have all your backup, all your business documents in HubDoc where it's safe, it's shareable, it's kept forever, and the CRA accepts all those digital versions of receipts. And then just make sure your bank reconciles your bank and credit card at the end of each month. Make sure what's on your ledger and your GL, your trial balance, make sure that matches the actual bank statement. Okay, let's get to questions. We got 3,
Yeah.
so
Some good action in the polls too. A lot of votes in the polls. That's interesting. Interesting answers. I like that. But there's some good questions. I've seen this first one here. Are you looking at the one from Alan? The credit cards. So Alan says he writes, if a credit card statement shows the vendor and amount, why does a physical receipt need to be retained as well? It contains no extra info. And I've encountered this a lot. I've seen it come up in CRA audits even, where CRAs, their official position is you need the receipt and you need proof of purchase, and credit card is proof of purchase. They don't consider a credit card statement an actual receipt. And the reason I think they say that is you don't actually know what was purchased. The credit card doesn't tell you what was purchased. I have seen CRA auditors accept just a credit card statement, but the problem, like it usually you don't, the accountant doesn't need to see the receipt. We can just see the credit card statement, and we, for the 99% of the time, we know what you're getting. If you're at Staples, we know what you're buying. The problem comes in is where if you're at a gas station and if you've just got ESO, that not necessarily, you can buy other stuff at an ESO. An ESO might not even, maybe you're buying cigarettes and fuel and a bunch of snacks and drinks and lotto tickets, and they're all on the same receipt. So that would just show up as one ESO transaction on the credit card statement. And so that's essentially where that fits in, that it can work. It also, Marge made a great comment there too in the side that it doesn't necessarily show the tax split, which doesn't always come into play because sometimes you can divide out the 5%, but it can. There are GST exempt items you can buy, especially depending on the industry you're in. Maybe you're, if you pay a consultant, what's a good, maybe I'm going to draw a blank on it, but you pay a consultant out of the States and the statement just shows a dollar figure amount and it's assumed there was no GST because they're in the States. They didn't charge you GST. So the actual receipt, the invoice from that consultant would show. And so they can work, but CRA, the ultimate answer with CRA says you need the receipt.
Yeah, you need proof of purchase and proof of payment. And like the Costco example is a good one. Like you can have Costco on and it might be like $500. Everybody knows how easy it is to ring up a tab that big at Costco. And if you just have the line item, there's no way for them to know like how much of that was personal and how much was business. If it was like a supplier that you would only deal with for business, it's less important, but it's for those like big wholesalers or like Walmart or something.
Yeah, and I've seen the same example where a CRA auditor, if you don't have that receipt for the 500 from Costco, they just deny it all. You don't show me it's business or else it's all denied. They don't even, you got to prove you're innocent. So.
Okay. Does using one of these accounting softwares to manage our books make the accountant's job at year end easier, meaning less accounting fees for us as a small business owner? Yeah, like if you're not providing a trial balance and general ledger, we're charging you for bookkeeping, like because we're just going to do it all over again, or we're going to do it from scratch. And if you give us like an Excel document that it doesn't have like it's single entry bookkeeping and the the bank isn't reconciled, and yeah, there can be like just incomplete information. We're not even going to look at it. We'll just ask for your bank statements and do it all from scratch.
Yeah, it can say if we're not doing the bookkeeping and you're doing it, then you're spending the time and you're not paying us for spending the time. So if you can, and if you go back to the start of this, rewatch it, and you can find a way to make it really easy, then yeah, if it's something you're comfortable doing and you figure out how to do it really well, you can save accounting fees for sure.
Yeah, and we have some prices and plans on our website, and all of our packages have bookkeeping included and bookkeeping not included. But if you want to do your own bookkeeping, that's fine. Just we want to set you up and like make sure we'll give you a Xero file with the proper chart of accounts. We'll make sure your bank accounts are set up, your invoices are all set up properly, and your opening balances are all set up. Then you do all the coding, and you just have to, yeah, you can do your own checks at the end of each month, make sure everything reconciles, and it's just setting you up for success. There's not a ton that can go wrong in that scenario, but we just don't like dealing with every different software out there.
Alan with another question asks, sorry, I was jumping ahead. I thought you cleared the other one, so we're already moving on. Just taking over here. Alan, you ask, bank account amount in the general ledger should always match the bank statement closing balance month by month, correct? Not always, because there can be outstanding items. There can be outstanding expenses and income. Normally it will. Like the answer is most often yes. Your GL at the end of the month is going to match the bank statement. Same with credit card statement, same with line of credit statement, same with the loan statement. There can be outstanding deposits and checks. That's part of the bank reconciliation process. So you might.
I just wanted to jump in, if in the traditional method of bookkeeping, you would generate a check from Simply or from QuickBooks, and you might do that on December 31st. You want the deduction in the 2020 year end, so you generate a bunch of checks, and those expenses are recorded in QuickBooks on December 31st, but then you mail out the checks, and they might not get mailed out until January 5th. They might not get deposited until January 15th. And then your cash balance in QuickBooks has already been decreased by all those checks you generated, the bank balance in QuickBooks, but the money hasn't been withdrawn from your account. So those would be reconciling items.
Yeah, it's much more rare. Doesn't happen as frequent now because most of the transactions you see on statements, an e-transfer, it's instantaneous, right? Tap your debit card is instant. So you see them all. There's less and less opportunity for there to be outstanding items. On the flip side, another example might be you get last day of the month, you get handed or anytime you get handed $1,000 cash for some job you did, and you record that you got cash, but you haven't actually put it in the bank account yet. So you made an entry to your accounting system in your GL saying you added $1,000 cash, but you haven't taken it to the bank yet. So they're less common now, but it is possible. So most of the time, 99% of the time, you're gonna see it match. And if it doesn't match, you either instantly know why it doesn't match because you know that outstanding item, or you panic and you start searching for the missing thing, and that can be annoying because you're line by line. You want to make sure comparing maybe the bank statement to the general ledger, and you're gonna go side by side and just make sure the software didn't mess up or you didn't mess up.
Yeah.
Timing between entry or posting, similar, yeah.
Yeah, and if you just do it the way we've recommended, import your transactions, do it on a cash basis, let the accountant do all those accruals, then your bank statement should reconcile every time. Yeah, I guess that's the gist.
Yeah, with most of the software now, it's pulling the items from your bank statement. So you wouldn't even be manually recording things that aren't on the statement. So it sort of forces you towards a mistake-free environment. So getting set up and set up for success that way is hugely important to make yourself do it flawlessly without wasting your time.
Okay, well, thank you, everybody. That's all the questions. The poll responses have been great. What info do you wish you had on hand to make business decisions? And the winner is all of the above, but like budget or forecast is number 2. I think that's a great answer. And that, yeah, I think that just goes, it takes accounting and bookkeeping, which is always dealing in the past, and just flipping it to look forward to actually do planning and make the right decisions. So that's a huge value add right there. The next one, why do you have a bookkeeper? It allows me to analyze my financial statements more regularly. Yeah, that real-time info, I would totally agree. Like having good data on hand for making decisions is so important today. Everything's changing so fast. And if you don't have one, you can call us and we'll connect you. It's a good one. There's a few on the chats right now that I know. And how do you manage your receipts? I wonder what all the others are.
Shoebox, I'm glad that only got 1 vote. That's how to coming to your account with a complete trial balance. That's you'll make them your best friend. You walk in the door with a shoebox, and yeah, you're the opposite of their best friend. But sometimes it's got to be done if you just don't got time, you got no other way. But oftentimes know that the shoebox is ignored entirely, and we just we're going right after the statements. The statements contain all the bulk of the information that's needed to start the bookkeeping. So
file folders on computers. Okay, so you're saving, taking pictures of stuff or scanning it in. Google Drive, yeah. And that's if you had like a stack of documents to scan in or take a picture of. I just think it's the naming and the saving the folder like structure that I've tried to do, and it's just not worth the time. But yeah, it is good to have, like that's just as good as HubDoc. HubDoc reads and does all that for you. Shoeboxes are great if you like slip a 6-pack in there or something. But yeah, we don't want all your paper receipts. Okay, well, we are 1 minute over. So sorry about that, guys. We will let you get back to your beautiful evening, wherever you are, Bowen Island, Calgary, Okotoks. Thanks for joining us. And we'll send this recording out. I don't know when exactly. It'll be soon, though.
Soon. Thanks for tuning in, everybody.
Yeah, thanks a lot.